The biggest IPO in the history of financial markets begins trading in 4 days. Not Amazon, not Google, SpaceX. The company that landed rockets on drone ships, built the world's most powerful satellite network, and quietly became the most critical AI compute infrastructure provider on the planet, goes public on Friday, June 12th, under the ticker SPCX. Welcome back to AI Assets. Today we are breaking down everything you need to know about the SpaceX IPO before it hits Nasdaq this Friday. The valuation, the risks, the hidden AI angle that most investors are completely missing, and exactly how to position yourself before the opening bell. Let's get into it. SpaceX was founded by Elon Musk in 2002 with a single goal: make humanity multiplanetary. 24 years later, it has become something far more valuable than a rocket company. SpaceX operates 3 distinct businesses that each represent enormous independent value. The first is launch services, the original business. SpaceX now controls over 60% of the global orbital launch market. Falcon 9 has flown over 350 missions with an extraordinary reliability record. Starship, the most powerful rocket ever built, is already on its 8th integrated flight test and approaching commercial operations. The second is Starlink, the satellite internet constellation that is redefining global connectivity. Starlink now serves over 6 million subscribers across 100 countries. It generated approximately $8 billion into revenue in 2025 and is growing at over 80% year over year. In conflict zones, disaster areas, and rural communities, Starlink has become irreplaceable infrastructure. The third business, and the one almost nobody is talking about, is AI compute. SpaceX is building one of the largest GPU supercomputer clusters on Earth to support Starship development, satellite constellation management, and external contracts. Anthropic, the company behind Claude, valued at $965 billion, disclosed in its IPO filing that it pays SpaceX $1.25 billion per month for compute services through 2029. That is $15 billion per year flowing from a single AI customer into SpaceX's balance sheet. SpaceX is not a rocket company. It is a diversified technology conglomerate that happens to launch rockets. The IPO targets a $175 trillion valuation. The price is being set Thursday, June 11th. Trading begins Friday, June 12th. And in an unprecedented move, 30% of all shares are being allocated directly to retail investors through Robinhood, Fidelity, and Charles Schwab, 3 times the typical allocation for an IPO of this size. Investor context. Why this matters for your portfolio right now. Let's talk about the direct investment implications, because they are broader than most people realize. At a $1.75 trillion target valuation, SpaceX would immediately become the 5th largest company in the S&P 500, larger than Amazon, Meta, and Tesla. Morningstar's independent valuation puts it at $780 billion, suggesting the IPO price includes a significant growth premium. But here is the key question every investor needs to answer. Which version of SpaceX are you buying? If you are buying a rocket company, $1.75 trillion is expensive. If you are buying the dominant AI compute infrastructure provider with a locked $15 billion per year customer contract, a global satellite internet monopoly in underserved markets, and the only company on Earth with a credible path to Mars colonization, $1.75 trillion looks very different. The stocks most directly affected by the SpaceX IPO are its competitors and partners. Rocket Lab, which has quietly built a strong small launch business, will face renewed scrutiny as investors compare its sub-$10 billion valuation to SpaceX's premium. United Launch Alliance, now owned by Boeing and Lockheed Martin, has been steadily losing government contracts to SpaceX for years. Any institutional rotation into SPCX will likely come partially at the expense of traditional aerospace holdings. The AI infrastructure beneficiaries are NVIDIA and CoreWeave, because every AI company that relies on SpaceX for compute is also buying NVIDIA GPUs. The demand chain runs from AI labs to SpaceX's GPU clusters to NVIDIA's chip fabs. What the market is missing here is the angle that Wall Street is almost completely overlooking. Everyone is valuing SpaceX based on its current revenue and growth trajectory. Nobody is pricing in what happens when Starship becomes fully operational. Starship changes the fundamental economics of everything SpaceX does. The current Falcon 9 launch costs approximately $67 million per mission. Elon Musk's publicly stated target for a fully reusable Starship is under $1 million per launch, a 98% cost reduction. At that price point, the economics of satellite deployment, space tourism, lunar logistics, and Mars colonization all transform completely. But here is the investment-grade insight. A 98% reduction in launch cost does not just benefit SpaceX. It creates an entirely new market for space-based services that does not currently exist because the economics do not work. Every company that uses satellite imagery, weather data, GPS precision agriculture, or space-based solar power becomes a potential new revenue stream for SpaceX's launch services. The second thing the market is missing is the Starlink government business. Starlink has active contracts with the US military, the Ukrainian armed forces, NATO allies, and multiple intelligence agencies. These contracts carry classified revenue numbers that will not appear in the public S-1 filing. Multiple defense analysts estimate government Starlink contracts could represent $5 to $10 billion in additional annual revenue that is completely invisible to public investors. You are buying a company with hidden revenue streams that cannot be disclosed. What happens next? How to position yourself. 3 specific dates and decisions you need to make right now. First, Thursday, June 11th, IPO pricing. Watch the final offering price relative to the $1.75 trillion target valuation. If the book is oversubscribed, which all indications suggest it will be, the final price could come in above the initial range. A price above the range is a strong signal of institutional demand and typically indicates a positive first-day performance. A price at or below the range signals more cautious institutional appetite. Second, Friday, June 12th, first day of trading. First day pop or drop tells you everything about supply and demand dynamics. If SPCX opens 15 to 3% above its IPO price, it confirms massive retail and institutional demand. If it opens flat or negative, it signals the valuation was stretched. Do not chase a large first-day pop. The better entry point on high-demand IPOs is typically the first post-lockup correction, 60 to 90 days after listing. Third, Starship commercial flight certification expected in Q3 2026. The FAA is currently reviewing SpaceX's commercial launch license for Starship. Certification unlocks the company's ability to charge commercial customers for Starship launches, a revenue stream that does not currently exist. Any positive FAA announcement before or after the IPO is a significant catalyst. The positioning play is clear. If you believe AI infrastructure, satellite connectivity, and next-generation launch economics represent the most important technology megatrends of the next 20 years, SpaceX is the single stock that gives you exposure to all three simultaneously. The last time a company of this scale and ambition went public, it fundamentally changed how investors thought about what a technology company could be worth. SpaceX could do it again. If you want to stay ahead of moves like this every single day, subscribe to AI Assets right now. We break down the biggest AI investing stories before the rest of the market catches up.